Welcome to Talker Tickers, where we break down the latest earnings calls. Today, we're diving into Kroger's Q2 2025 results.
So, right off the bat, Kroger served up what you'd call a mixed quarter. They actually beat Wall Street's expectations on earnings per share, which is great. But when you look at the top line, revenue came in just a little shy of what analysts were looking for.
Now, here's where it gets really interesting. You think a revenue miss would spook the market, right? Well, not exactly. The stock actually climbed about 2%. And that presents a puzzle. Why all the optimism on a mixed report? Let's dig in and figure out what's really going on here.
Okay, so the answer really lies in the strength you see when you look underneath the surface. That top-line revenue number, well, it doesn't tell the whole story. When you dig in, you see a much healthier picture, a business that's firing on all cylinders in the areas that really matter. First things first, their digital game is absolutely on fire. We're talking a massive 16% surge in e-commerce sales compared to last year. And get this, management said this was driven by delivery, which for the very first time was actually bigger than store pickup. That tells you everything you need to know about what customers want right now: convenience and speed. And you know what? That momentum wasn't just online. It carried right over into their brick-and-mortar stores. Identical sales, that's a super important metric in retail, grew a really solid 3.4%, which just blew past what anyone was expecting. And this is the sixth quarter in a row they've seen improvement here, so their in-store strategy is clearly working.
So how are they doing it? Well, on the earnings call, the CEO pointed directly to a couple of key areas. First, pharmacy, and we're talking specifically about those super popular GLP-1 prescriptions. And second, fresh produce. I mean, these are the exact categories customers are focused on right now. Kroger is winning in those high traffic areas, and that strength is basically lifting the entire business.
So the big takeaway here is that this isn't just luck. This performance is absolutely not an accident. It is the direct result of a very deliberate strategy, a playbook that management is now doubling down on. So let's take a look at what that playbook is. Okay, so on the call, leadership laid out a really clear four-step plan. First up, they're simplifying deals and just lowering prices on thousands of items to sharpen their value. Second, they're using their huge network of stores to make delivery faster and cheaper. Third, they're getting smart with AI to make everything from pricing to inventory more efficient. And finally, they're hitting the accelerator on opening new stores to grow their footprint.
And here's the proof that it's working. This strategy is already showing up on the bottom line. It helped them expand what's called their FIFO gross margin, which is just a key way to measure profitability, by 39 basis points. Now, what that signals is that they've got a great handle on their costs, and they're selling a better mix of higher margin stuff. It's a really good sign.
All right, let's zoom out a bit. Because, Kroger isn't operating in a bubble. We need to look at the bigger picture to see how all of this fits into the wider grocery industry. They're dealing with some pretty major forces out there, both good and bad.
It's really a story of push and pull. On one side, you've got these major headwinds. I mean, the competition from giants like Walmart and Amazon is just fierce, and their fuel business isn't as profitable right now. But on the other side, they're riding some powerful tailwinds. You've got consumers trying to save money by eating at home, and that pharmacy demand we talked about is just booming. It's a real balancing act. So let's put it all together. What does all this actually mean for the stock going forward? What's the next call? This is the core question investors have to be asking themselves right now.
And here is the fundamental question for any investor looking at Kroger right now. Is the market too focused on that tiny revenue miss? Are they so hung up on that one number that they're completely underappreciating this much bigger story about margin expansion and profitability that management is so confidently building?
I mean, when you look at it, the bull case is really compelling. Think about it. Management didn't just meet expectations, they actually raised their guidance for the whole year. Margins are getting better, digital is speeding up, their core business is executing flawlessly, and on top of all that, they're giving cash back to shareholders with a dividend increase and stock buybacks. I mean, these are all the classic signs of a super healthy, confident company.
So for us, the call here is outperform. The underlying execution is just too strong. The path to better margins is clear, and management's confidence really shines through. All of that, in our view, completely outweighs that tiny miss on the top line. It seems like the market's initial positive reaction got it right. The real story here is all about profitability, and we'll definitely be watching to see if they can keep this momentum going.
This is not financial advice.